Good evening friends. Welcome to the channel. Today is 2nd January 2026 and if you are wondering whether the bulls have fully returned at the start of the new year, then the answer is a resounding yes, but with some conditions. Today on Dalal Street, we saw a very strong session. Even though global markets are still coming out of the holiday hangover, Indian markets ignored the selling by FIIs due to domestic strength and closed near record highs. In today's detailed report, we will cover the scorecard, Nifty 50 closing above 26,200 and Sensex regaining the level of 85,500. Sector watch, why Coal India and NTPC are on fire, while FMCG giant ITC remains sluggish. The big picture, global geopolitical tensions, European leaders' 2026 outlook warning, and the latest update on Trump's tariff delays. Crypto Corner, Bitcoin consolidating at $88,000, is a major breakout on the horizon? Get your notepad out because we are going to deep dive into the data that truly matters. Let's get started. First, let's take a look at the closing numbers. Today was a day of consolidation with positive bias. Nifty 50, the index closed at 26,253.50, gaining 106.95 points or 0.41%. We are seeing a strong support forming around the 26,100 zone. Sensex, BSE Sensex also showed the same optimism, finishing the day at 85,532.64 with a gain of 344.04 points or 0.40%. Bank Nifty, in terms of momentum, the banking index performed slightly better, closing above the psychological level of 60,000 at 60,008.60, which is an increase of 297.05 points. Market breadth volatility. Broader markets were mixed but remained positive. There was strength in mid-caps, but the most interesting point is India VIX. It saw a significant decline, dropping more than 3% and settling around 9.18. This means that despite global uncertainties, traders are not currently afraid of a major crash or violent decline in the market. Institutional activity. The tug of war continues in 2026 as well. FIIs remained net sellers, selling approximately 3,269 crores rupees in the cash market. DIIs took charge again with a net purchase of approximately 1,526 crores rupees. Analysis. Although DII support is holding the market, the continuous selling by FIIs is the only reason preventing us from making a new all-time high immediately. This trend will need to be closely monitored next week. Where did the money make today? Today's theme was clearly old economy resilience, meaning energy and metals. Top gainers, Coal India Ltd, today's superstar. This stock closed at 419 rupees and 50 paise, jumping nearly 4.8%. This move came with heavy volume, attributed to news of foreign participation in coal auctions, which is a significant structural positive for the company. NTPC, the theme of power demand remains intact. NTPC reached 348 rupees and 10 paise, up 3.5%. Hindalco, up more than 2.2%, as stable manufacturing data from China has led to a rebound in global aluminum and copper prices. Bajaj Finance, good buying was seen in this stock, which remained nearly 2% up, indicating a return of confidence in the NBFC space. Top losers, on the other hand, defensive stocks were washed out today. ITC, the biggest stock pulling down Nifty today, which fell by 3.5% to 351 rupees and 10 paise. Investors are booking profits here due to concerns over volume growth and fears of potential tax changes in the upcoming budget. Nestle India, down by 1.25%, closed at 2,578 rupees. Bajaj Auto, after a recent sharp rally, it saw a correction of about 1.3%. Key takeaway, the market is rotating. Money is moving out of expensive defensive sectors into value plays like power, energy, and metals. Now let's zoom out a bit. What is happening in the global sentiment that is affecting India? 1. The impact of global markets and the holiday. Yesterday, the American markets were closed due to New Year, so we did not receive any direct signals from Wall Street. However, the European markets kicked off the year with a bang and reached record highs. London's FTSE 100 broke the 10,000 level for the first time, led by defense and energy stocks. This European rally provided a psychological boost to the Indian markets today. 2. Asian signals. Asian markets were mixed. While Hong Kong's Hang Seng jumped on hopes for tech stocks, the region's manufacturing data remains sluggish, which is holding back significant momentum. 3. Currency and commodity. Rupee versus dollar. The Indian rupee weakened slightly and is trading around 90.19 against the dollar. Continuous FII outflows are putting pressure on the currency, although RBI's intervention is reducing volatility. Gold and silver, precious metals have had a strong start to 2026. Gold is maintaining its gains as it acts as a hedge against the geopolitical risks we will discuss shortly. 4. Corporate news flash. Ola Electric. A major domestic news, Ola Electric has announced the successful development of Bharat Cell, which is India's first indigenous dry-electrode battery. This is a significant step for the EV ecosystem and Make in India. Tata Steel. A large block deal of over 1 million shares was observed, indicating institutional churning. This section is very important for your medium-term strategy. Even though there was no breaking quote from any leader today, the story of 2026 is being determined by these two major political issues. 1. Relief from Trump tariffs. US futures and Asian markets breathed a sigh of relief when President Donald Trump postponed the planned tariff increase on furniture and kitchen imports until 2027. This increase was set to take effect soon, but the market is viewing this delay as a sign that the administration may be more pragmatic than expected regarding the trade war. This has alleviated immediate inflation fears, which is positive for global equities. 2. Europe's make or break warning. While markets are rallying, political rhetoric in Europe is serious. Key EU leaders have warned that 2026 will be a decisive year for the continent. They are citing the dual threats of Russian aggression and economic stability. This geopolitical concern is pushing capital towards safe assets like gold and, paradoxically, defense stocks, which explains the surge in European defense shares today. 3. India narrative. At the domestic level, the entire focus is now shifting to the union budget. Prime Minister Modi's recent meetings with economists have emphasized mission mode reforms for 2026. The market is now expecting a capex-heavy budget that will focus on self-reliance. This aligns perfectly with today's top gainers. For our crypto investors, the start of 2026 has been somewhat calm and consolidation-focused. Bitcoin is currently trading in a limited range between $87,500 and $88,600. It is facing resistance near $89,000 but has strong support at $87,000. This volatility squeeze is real, expect a big move soon. Altcoins. While BTC is sluggish, altcoins are awake. Solana, XRP and BNB have shown strength and have increased between 3% to 8% in the last 24 hours. Sentiment. Overall sentiment is cautiously optimistic. Institutional interest is high, but everyone is waiting for Bitcoin to determine its direction. Either it will break above $90,000 or retest $85,000. So, how to trade on Monday? Keep an eye on the level of 26,300. Nifty must close decisively above 26,300 to start the next rally towards 26,500. If we get rejected from here, we could consolidate back to 26,100. Stay with the leaders. The rotation in power, energy, and infra is real. These sectors could outperform until the budget. Caution on FMCG. Avoid catching falling stocks in the FMCG sector until there is clarity on rural demand in the budget. Keep an eye on FIIs. If FII selling drops below 2,000 crore rupees per day, it will be a sign that the bottom has been formed. This was your detailed report for 2nd January 2026. We are heading towards an exciting year. Next step for you, if you want to know which power stocks I am keeping an eye on for the budget rally, I have provided a link to my top 3 picks in the description. Be sure to check it out. Don't forget to like the video, subscribe, and hit the bell icon so you don't miss any market updates. See you on Monday.